Hi guys, it's Mark here at Teslary, and Tesla closed red today, $242 even, and that's a share price decrease of $2.12 from yesterday, or just 0.87% down. Now, if you're watching the action today, or if you're just looking at this chart, you know that there was a pretty brutal sell-off going into what, maybe towards lunch, and it kind of stopped around 1 p.m. and it was a pretty crazy drop. We're talking 3.8% at its lowest, around $234.70, 60 cents a share. So if you had any buys there, imagine, but it was really bouncing off that 235. We talked about that. The funny thing is, I don't even have any levels below this, but if you look at the, if you were to draw horizontals from, I believe, what is this, a month ago? Okay, let's just take a look at where it bounced so we can understand better. So if you draw a line from 235, you just basically get into this range that we had when we broke out from our bottoming process in August 18th. So it's kind of there. It really is just one of those $5 increment things in my mind. I think $5 increments seems to be very important for Tesla. And we can go on a smaller time frame and take a look at, another reason. Not really a reason, but some evidence that it does really, really matter, that options expirations are really important to Tesla. You can see how when it was trying to make some highs in the morning, it was really bouncing down from 245. And when it tried to support itself, at another strike price at 242.50. And you can see it kind of oscillate between those 2 points for 3 touches, essentially. And it broke down. And then what did it bounce off of? It bounced off 240 and 78 cents. And then it rejects that 242.90 and just sells off completely. So we were looking at I'm sorry, it's so messy. I'll get rid of the drawings in a second, but I just want to keep them because it's something we drew yesterday for today's action. So we talked about this being a bear flag, and we compared it to Google, the breakdown in Google. So it's like you have this flagging pattern, but it has like this little last breath of trying to find a bounce yesterday afternoon, and it didn't get really anywhere, right? And it kind of does this kind of like curling inverted cup and handle kind of motion. And we'll look at Google really quick because we drew a chart, if I can find it here. Okay, yeah, here we go. And you can see how this flagging pattern, I don't know what that is. Let's do a quick trend line. So we have that kind of flagging pattern, and it bounced around that for a while, but it does that thing at the end of its flag. It's trying to get back to the top of the range, and just doesn't have any interest, right? This is just the exhaustion of buyers. No one wants to buy anymore. No one cares anymore. And you basically sell off. And that's what happened with Tesla as far as the PA goes. If you don't look at the external factors, if you don't look at what actually happened from the news, PA can give you some clues as to how the market wants to respond. Because obviously it could have just went, if there's some good news today, it could have just went boom, right to the top, bounce off 250, sell off. That would make sense. But it broke down pretty much in the morning. It tried it best it could to get off 240, 250, but it really didn't happen. There was too much negative sentiment when it came to one piece of news. And we'll actually go to the news first. We actually have news for Tesla world, and it's not good news. So Deutsche Bank went ahead and lowered its price target in Tesla. And because it fears this 2024 earnings will contract, kind of what Goldman Sachs did last week, I believe. They kind of had the same issue with earnings for next quarter, this quarter, next year. Deutsche Bank cut its 12-month Tesla stock price on Wednesday. The bank's analysts warned that the EV maker faces headwinds to earnings growth in 2024. The bank lowered its estimates for total vehicle deliveries this quarter by 15,000. Now, this little piece of information, this is something that Elon warned everybody last earnings call, but no one cared to really listen because analysts don't really care. They're like, oh yeah, factories should shut down. Okay. But they didn't realize they were really going to shut down, and they're going to shut down in multiple locations. Deutsche Bank downgraded its price target for Tesla, and it went to $285 a share from $300. In the highlighted area, I'll read it to you. The bank predicted Tesla would report deliveries of 440,000 units in the third quarter, lower than the estimates of 455,000 units. That could result in lower quarterly revenue than the bank previously estimated at $23.3 billion, down from $24.1 billion. Meanwhile, the bank said earnings per share could fall to 71 cents from the street estimates of 0.87 cents a share. Looking at 2024, however, we see considerable downside risk to earnings expectations due to much lower volume outlook than the market believes. So they went to even just make it even, they draw like a worst case scenario. And they're thinking 2024 will have a lot of issues. And I assume they think this next quarter, quarter four, will have problems as well. The bank trimmed its 2024 production outlook to just 2.1 million units next year, down from the consensus expectation of 2.3 million units. And like, I have to assume like they understand Cybertruck should be ramping up during that year. Anyways, on a positive note, Tesla could face less pricing pressure next year, resulting in a modest price dip of 1% for its cars. The bank sees earnings per share of $3.90 in 2024, lowering the consensus estimates of $4.76. Oh, okay. Deutsche added that the next generation vehicle platform would be the key to unlocking further growth for Tesla, meaning that they think our growth is pretty much capped at this point in time. And this was the thing about Deutsche's. This information that Deutsche got was from a quarter two or midsummer meeting they had. Actually, I assume it was in Berlin with Tesla executives or board members. And the board members are trying to gather more investors from the institutional side. As you know, Tesla doesn't have many institutional investors. Well, they do. But I mean, in comparison to like an Apple or something like that. So they've been really on this kind of like campaign for the last year and a half, 2 years to really get more of these investors on board by meeting with them personally, showing them behind the scenes what's happening at their factories, showing them the books. They understand from a very intimate perspective about what's really going on behind the business, because that is the effort by the board members to really get those people on board. So they had this meeting in summer of this year. So they knew off the bat from June maybe, that what the output really looks like, the plans for the factory shutdowns and stuff like that. And now it is September. Okay, it's the end of quarter three, and they come out with this report 1 week before production and delivery numbers. So what I would really love to see is that the deliveries, I don't care about the production numbers. Everyone knows the production numbers are going to suck because multiple factories shut down for multiple weeks. Okay, got it. But deliveries, our hope, what do we know? We had 10,000 extra X's and S's. If we have the price cut really move that metal, maybe we get 10,000 cars out of that. Maybe. As far as the inventory that we brought into Q3 from Q2, there's inventory there, right? There's price cuts in the meantime. But I want to see how what they believe is a lower number of deliveries. I thought they would talk about production numbers mostly, but if they think the lower number of deliveries at 440,000 units for this quarter, I think there are some analysts, even on the Tesla bull side, that are looking at around that 440 number, 442. I think Troy might be at. So I don't think they're definitely off base. Are they influenced by Troy's numbers? I believe so. I think a lot of institutional investors use a shortcut by signing up for Troy Tresslake's Patreon to get those details. And I think that's how they modify their numbers. I think Troy released his number last week, and that might have influenced what Deutsche was projecting. So I'm not saying they're wrong, because there's a lot of people pointing to that low 440 number. But let's just really see how that's going to happen. Now, I do believe we're going to have an opportunity to hedge this potential move, because usually the production and delivery numbers come out on the weekend. What Sundays? Typically in the morning. We're going to get it in Monday. I need to confirm what time that is, but if we have the ability to hedge that day, that could be good. So you don't have to have that theta burn going into the weekend, right? So we don't have to carry something over the weekend for some Sunday morning release, since it's Monday. Let's find out on your own or my own later, and we'll talk about it in another video this week, if we can have the opportunity Monday morning to hedge. So that's the Tesla news from Deutsche. I was really upset with that, because it's like, you guys, you've had these numbers for months. Anyways, so this is the economic data that's going to be dropping tomorrow. We have initial jobless claims that comes out every week at the same time. Obviously, labor market has been stronger than everyone's thought, only to be revised down later on. So who really cares, and who knows? We don't even know what's going to happen with jobless claims. So GDP revision is going to come out. What do we want GDP to be? Do you want to see a stronger economy and keep rates higher, or do you want to see a slightly weaker economy and get rates to cut? Not really. not be higher, but we don't want them to even stay high, right? We want them to be cut sooner rather than later. In certain extent, I know some people would say inflation is really bad, and actually it is. I mean, food costs are pretty crazy. Fuel costs are very crazy. Those are things that we could have done something about, but we didn't. We didn't solve supply chain problems with food in this country. We didn't solve the kind of like just from a national security perspective, encouraging people to extract more energy from the ground, just for just our own country's sake, to defend itself against people that want to put pricing pressure on us, or even just from a military aspect. That's something else. That's a whole nother video. Anyways, pending home sales at 10. I don't think that really matters. We already know from a home housing starts, it's not looking that great, and the rates are insane. I think I don't know if it was month over month or year over year, but applications are down like a considerable 15-20%. No one can buy a house. So we have a Fed governor speaking at 1 p.m. and Powell speaks at 4 p.m. I don't think this is going to be too big of a deal because he's going to have like a roundtable with teachers across the country. I'm not really sure that roundtable is going to have a lot of monetary policy talk. But who knows? Who really knows? Who really cares? Okay, so that is generally the news. Let's go back to the chart real quick and just try to understand what we're seeing here. So we talked about how Tesla broke down from the flag, right? Just like the Google, very obvious. We talked about that $5 increments, really important when it comes to trying to find levels for Tesla. Now, this buying that we saw here, it wasn't just represented in Tesla, but across the whole stock market. It got to a point, I think, that how oversold is oversold. And we said in yesterday's video title, it was oversold can say oversold, and it got sold pretty hard today. And Tesla still closed red. I mean, the S&P 500 barely closed green, and I think we should take a look at that in a second. But so what did we talk about as far as price action wise? We figured that in a really bad day that you would have this movement. It would come out from the open, it would be flat at the open, and it kind of was flat. It wasn't really gappy. And then you see a sell-off. And what did we say? A bounce at 240. So you get a bounce at 240, right? Well, this is what we said exactly. You break down from the flag. You try to find a horizontal. The price tries to find a horizontal, bounces off the horizontal, breaks down from the flag, bounces off 240, tests the horizontal again at 240, 250, sells off from that. And what is our sell-off? This is our drawing for the sell-off. We anticipated if it was going to go down, it would be very severe. I didn't anticipate a very strong bounce, and I really didn't. I'm not going to pretend like I knew that was going to happen. That was really surprising, but could be a sign that finally people want to step in and buy, because the reality is no one's buying for days and days and days. No one's buying anything. And Tesla's been suffering a lot. I mean, if we were to just look at this in this longer, not even longer, but a short-term perspective, how much it fell, it would have been a 14% drop today. Okay, so that is really rough, and it's almost uncalled for, because all the information these analysts are putting out about, the delivery numbers, production numbers, blah, blah, earnings, that is all information they've had for months. Let's look at the S&P 500. Look, how did we guess this action? We actually guessed it pretty well, I think, that you would have had it's basically when you were selling off, you would try to base around the gap. And if you don't hold the gap, and it barely held the gap, right? So this horizontal line is the top of the gap, and the next one is the bottom of the gap. So it actually filled the gap in the SPY. In this diagonal, right? What is that? That is the long-term trend line from earlier this year. So it kind of dipped into it, like the other indices, I believe, already did that. I think the Nasdaq fell through its trend line a couple of days ago. So what the obvious action would be what? So you're selling off, right? And then what? You bounce off the trend line and the top of the gap. And it barely held above it. No, it really was in a couple of minutes. Broke down, did what? Went slightly through the gap, bounced up, double bottom, got bought back up really quickly, like insanely quickly, which is, I think it's really surprising. I was expecting a dip into the trend line and then consolidation from one day. That was my guess. But if you are long S&P 500, or if you have other stocks other than Tesla, this is really good, because I think a lot of names closed in the green today. Yeah. So Very interesting that we have buyers. It's a good sign because you didn't really see that vigorous of buying for some time. I mean, just look at the chart, and we've been predicting a sell for a long time, right? But there you can see that the buying is really not, no one's really that interested. I mean, every day basically closes red, and intraday buying only happened maybe kind of briefly once in the 19th of September. It is now the 27th, and we finally found some buying there in a very vigorous manner. I think I bought 2 calls on S&P 500 as kind of a hedge for my hedges, and I think it went up a considerable amount. So we also talked about energy. I just wanted to tell you guys, like, I mean, we talked about energy. We said energy has been quietly selling off for a long time, like 4 or 5, 6 days. Even though the price of WTI of oil is strong, that was selling off, and I was thinking that that could be a play as well. So looking at Tesla again, what can happen for Tesla? Tesla's up in the after hours, and it's only a couple cents. I'm telling you, I know you guys, it's a couple cents, but it's really just a sentiment thing, because the people buying after hours is not like a bunch of Wall Street guys. Look at the order book for Tesla after hours. It's like I'm placing an order for like 5 shares or something like that. It's just regular people like you and me. They just got home from work. They're looking at the action. They said, oh, Tesla had some interest today. Maybe I'll add to my position a little bit. It's been 14% down, right? So sentiment, like if you want to tout the idea that retail investment in the numbers that are investing in Tesla, we have like what, 45% retail ownership of Tesla. If you want to tout that as a positive for the stock, then sentiment readings like after hour and pre-market performance should matter. I think it should matter because it shows that that retail wants to buy. Now, I would say though, this as a caveat, pre-market action is just a setup for a short. I mean, if you see Tesla green in the pre-market, it's just going to get shorted throughout the day. I mean, they're going to get, if you have a stop loss, they're going to get your stop loss. They know what it is. They can see it on their Bloomberg terminal. But you can see that, like, if there's any positive sentiment on a day, it just gets sold. So buying after hours maybe is a little bit better because you can take advantage of any good news over the night. And I was surprised that when the Deutsche price target revision came out, like the pricing was rather stable pre-market. But it kind of, the thing about that, so okay, and you were probably thinking the same thing. You're like, okay, the Deutsche note came out and the stock hasn't crashed yet. And why is that? Because the people that are surprised by a note, by a report, by an upgrade or downgrade, if they can, they will support the price of that stock for one reason and one reason alone, to get their short in. They're just going to get their short in. And that's what happens when you see like a flagging pattern like this kind of like consolidation or this oscillation in a tight range. This is on purpose. This price is being supported. Is it being supported by millions and millions of people buying randomly at $244 a share? Maybe. Or is it institutions propping the stock up for as long as they can, or as long as they feel it's necessary, and to kind of generate the idea that the price has supported itself while they're adding puts to their position, and they just let it go and let whatever happens. And all of a sudden, if you see natural action and people are wanting to get out and it sells off in this kind of lightning bolt pattern down, that's a really good example of the pricing is just let go because the news already happened. Right? It already happened. The Tesla was underperforming. You can say that the other names are selling off, but Tesla underperformed again to a measure of like, if the S&P 500 is going down 0.5%, you would only imagine Tesla would go down at the max like 1 point something percent. It went down 4%. So you know that they're supporting the price. You want to get short. Did I get short? I went short just a little bit. And it kind of worked out. I mean, the puts went up like 223%. So yeah, I'm just saying that when the news breaks and you see that stability of pricing, you could say, oh, thank God, we made it through that downgrade, or we made it through that like price target revision, or we're making it through this type of bad fundamental news to the company. Great. Understood. We made it through, but just understand that it's just because the people who hold the position were caught off sides. But maybe they have enough resources on their disposal because they're an institution. They can prop the price up just for a little bit, so they can either get out of the position, get themselves ready to hedge the position, or if they like if they understand that, okay, we want to go short on this name, and we don't have any position at all, they can start building one very temporarily during the course of the morning and then let it go. Right? You support the price, you build your short position. you sell all your shares, start a cascade in pricing, because you're gonna sell because you feel like you can drive that price down. You're gonna sell at the market price. You're just like boom on the market, wipe out all liquidity, and it plummets just like that. We look at what is a good telltale sign that the turnaround is going to happen. I think yields will lead. So yields kind of topped out here and started selling off, and the market went and followed basically. Now, why did the yields turn? I think I don't have a good answer for that, to be honest with you. I really don't, because I don't think it would have turned at a place I would expect it to turn at. So if you went to like a daily time frame, maybe it's this peak right here at 4.7%. But if it does start moving back up, this is the 10-year, I'm sorry. If the 10-year starts moving back up, you're really going to see it top out around 5.1, which would be horrible, right? But for now, it kind of rejected. And when it did, bonds, yields went down, stocks went up a lot. Makes sense, right? Makes sense. It's one of those things too. If you want to confirm a move, you want to kind of compare it to an inverse of the yield of a 10-year or a 2-year. And I think you'd be more comfortable going in the direction that the stocks are going, if you can see that the yield is coming down, and you can see how the yield kind of is broke down a little bit. So that's good, but the dollar still remains strong. It's kind of ridiculous, to be honest. So just know that even though you can feel the pressure of the dollar, that even last year, just last year alone, this is September last year when the dollar topped out. The dollar topped out on the same day as today. So in 2022, on September 27th, the dollar topped out at 114.7, and today is now the 27th. So you can think this is a cycle thing. You think this is a little bit overbought. Do you want to see this on a daily time frame? This thing is crazy. Look at this move up. This is like Tesla's move up in May, right? That's like, if you want to see it on a bigger time frame, it's hilarious. So this is the weekly time frame for the Dixie, for the dollar index. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 weeks in a row, green. Now I'm going to kind of zoom out on the chart. 11 weeks in a row, green on the dollar. Isn't it a little bit overdone? I think it's personally overdone. Is it a good setup to go short? I mean, who knows? Honestly, who knows? Does it really want to get back to 114? Maybe by the end of the year. Short term, we're looking for what? We're looking for a seasonal bounce. Now, what did that bounce look like again? Just to remind you guys, let's go back to like last year, and we can see the highlighted area. And if you missed the other videos, I just want to touch base on it again. This is the time frame of here we go, the middle of September to the beginning of October, where it had a very sharp drawdown of 13%. And after when October started, what was the rally after it bottomed? It was a rally of 6%. Did that rally get sold? It really did get sold. It got sold pretty quickly. I want to say it got sold in 2 days. So in 2 days, it got sold 8%. So it went up 6%, consolidated for 2 days, drops 8%, makes a new low. And we'll go to the daily so we can see how oversold it could have been. And looking at the September low, which is right here on the 20th. So it bottomed on the 30th, and with really high volume on the S&P 500. The RSI was 28.4 on the SPY that day. And to put that into comparison, when the SPY bottomed in October, the real bottom for that year, it was an RSI of 43. When it bottomed in September, 28.45. Let's look at today's and yesterday's RSI. So yesterday's RSI was 30. Today's is 30. So we're getting pretty low, and we haven't seen a 30 in quite a while, I believe. Maybe not since then. Yeah, I think we're gonna have to go back to last year. So we didn't see this number until we bottomed last year, basically, on the RSI. So the relative strength index, we didn't get that value until since when we bottomed. That's how oversold it is. Of course, we didn't have like a 14% drawdown, maximum 6.8% intraday from recent high. But yeah, I'm just saying maybe this is the time. Let's check the MACD. The MACD is getting destroyed. No one's buying anything. So I would say if we're going to have our bounce, it's going to be because of a GDP read on tomorrow, or it's going to be PCE on Friday, which is the second inflation report of CPI. Then we have PCE. So if we're going to bounce, and no one knows how it's going to bounce and when it's going to bounce, but if it's going to bounce, it should be pretty vicious. It should be a pretty vicious rip for about a day and a half, maybe a day to the top. It would be then kind of the consensus view from seasonality's point of view as well, that if it was to have a nice rip, let's say on Tesla, let's say you get up like 8% on Tesla. That's pretty, I don't know if that's really possible. Let's say you do. 8% will be below the gap, so that kind of makes sense. Like 260. That would be a nice place to reject, I guess, I think. That makes sense. But if you do get to that point and it's sold off from a seasonal perspective, it sells off into October. Last year, it sold off considerably. So if it does get a rip, great if you're long. Close, maybe scale out of your longs, close your longs, add hedges. Right? Okay, thanks guys.